of the channels with the events team on YouTube. Hey, Rosemary. And I'll be looking on Zoom as well. So as I said, potentially there are just under 900 of you already registered to join us today. So there could be quite a lot of chat and a lot of questions, but we'll keep an eye on it. Hi, Dipesh. And as ever, we'll allow time at the end of the webinar for additional questions. So that's our usual format. And if any of the questions are coming in with people asking similar things, the same things or anything pressing, then I will stop as I go along. And we're going to have a few polls today in the webinar as well, so we'll get you all involved. And also, while I'm remembering it, you all know that on LIBF, you can go to the website and find all of the series of our webinars, and also the podcasts that follow the webinars, Dive into FinTech, and we'll have one of these for this session coming up very soon as well. So a lot to get out in terms of housekeeping before we get stuck in. And I think we're 2 minutes in. We're still many people coming in. Hello, Peter Ha. I love seeing everyone's photographs and seeing people go live. Thank you very much to the events team. It's put in the chat now, the listen to Dive into FinTech podcast that comes out after all of our webinars. Fingers crossed that I'm not going to lose connectivity. Everyone has that moment of unstable connection, she says, but the events team is there for all the other questions, and they're there in the background as well. Okay, let's get started and we'll get stuck in. I will introduce the panel to you in a bit. I just want to sort of set the scene while everyone is coming to join us. I'm sure we've all seen that Bitcoin is, someone will correct me as well, it's hovering around $69,000, or it was last night when I went to bed. So if you know better, let me know, right? Ahead of the Coinbase IPO that's coming, I think tomorrow, actually. So maybe a lot of us have been thinking about cryptocurrencies, and we're maybe potentially also confusing that with digital currencies. We may also have seen some news about Sweden and the Caribbean and China and Central Bank Digital Currencies as well, talking about tokens and accounts. And I think this is one of those situations where some of the terms might be getting confused with other terms. Some of us might be a little bit bewildered, and some of us just might be thinking, well, I've got part of a handle, I want to get the rest of the handle. So before we actually start and we get to discuss this with the three experts, let's go, Roxanne, can we go to the first poll question, where we're going to just gauge what our understanding is of the topic as a group. So we'll set poll 1. What is your current level of understanding about central bank digital currencies? So we'll be talking about whether or not central bank digital currencies are a game changer or are they digital hype? So let's see what we know already. This always reminds me of a horse race with jockeying for position. Oh, poor is in the lead. It's very poor. All right, we'll give it a little bit more time because we've got lots of people still joining us, as it were, as well. Okay, so I guess what we're seeing overall is that for most of us, and I would probably put myself into the probably average to poor category, right? You know, everyone has limited knowledge of the details, but we have an understanding probably of something much higher. So poor is where we're mostly coming out. Okay, so we'll stop sharing the results at 37%. All right, and I'll close that poll. All right, this is good as well. Now, before we move on, Roxanne, we have another poll. Given what we know is our base for the knowledge, let's look about what we think for central bank digital currencies where we are. We know that people join us from all over the world. So based on what you know already, do you think there is a need for a central bank digital currency in your country? Interesting, because we're kind of fluctuating, aren't we, between unsure and yes. And maybe hopefully, for sure, by the end of today, you'll have a better idea. And some of the unsures may join the yeses or the nos, and some of the nos may change their mind, and all around we'll see where we wind up. We can at the end, we're going to be having another poll to see what we know. But overwhelmingly at this point, we're just nudging ahead there with yes. Okay. So that's great. I'm going to stop sharing the results. So we're getting an idea of us as a group not sure that we know enough, but we do think that we need one. So I said today that I'm not by myself. We're going to be discussing this question of game-changing or digital hype with three very well-informed experts in this field who are from the Whitechapel Think Tank Group, an independent not-for-profit body that was set up to advance fintech and DLT in the UK. So before we get stuck into the questions, I'm going to ask each of them to introduce themselves. Jeremy, can we start with you with a brief introduction?
Yes, absolutely, Helen, and thanks very much indeed for asking me to do this, actually, and also for including the other my colleagues on the Whitechapel Think Tank as well, and big thanks to LIBF for making this forum available. My name's Jeremy Wilson, and I was, until a couple of years ago, with Barclays Bank. In fact, I spent 47 years there, and then I retired as vice chairman of the corporate bank. Since then, I've really spent the last couple of years on two major areas. One is the new technologies, all the new technologies, including this one, and the other is in continuing to keep the planet habitable. That's probably, and I chair the Whitechapel Think Tank. Do you want me to talk briefly about the Whitechapel Think Tank, Helen, or leave that till a minute or two?
No, yes, please go ahead.
Yeah. So the Whitechapel Think Tank, for those who aren't familiar with it, was something that was set up about 5 years ago now. And it was really focused primarily on blockchain and distributed ledger technologies. And the idea was to get a forum where, on a topic that really relatively few people knew much about, where the public sector, notably government and the regulators, and academia, and the private sector, particularly the startups and the incumbents, could get together and frankly just talk about this new technology, which seemed to have it seemed to have significant potential. There was a general sense that something very significant was on the horizon here. Now, at that time, little did we realize and appreciate the speed with which things would develop and move forward. And so really the production of this paper, which we'll probably talk further to as throughout this session, really came about when it became apparent that it was going to have a significant effect on currency per se, on currency itself. It wasn't just distributed ledger technologies and blockchain, but it was actually the if you like, the children of that were beginning to really gather momentum. And frankly, since the paper was completed at the end of last year, things have moved on again. And we'll pick up and we'll talk to that as we go forward. I think just a couple of quick anecdotes, if I may, Helene, and then I'll shut up because I know we need to do the other introductions. One which may be of interest, and I've never done this before, so you will have to forgive me, but I have as a many great grandfathers a man called Joseph Pease. Now, Joseph Pease was the man who financed the world's first railway, the Stockton to Darlington Railway. And I find myself, when I'm looking at the digital currencies and particularly CBDCs, of thinking, much as I think that man must have looked at when he walked into that shed and saw the first engine, the first railway engine effectively, which was nothing more than a steam engine on wheels, and began to realize and understand the sheer scale of what lay ahead, which ultimately became, of course, the full force of the Industrial Revolution. Now, the second is more prosaic, and I don't know how many people had the opportunity to join the Bank for International Settlements Innovation Summit a few weeks back. I've never seen anything quite like that. That was remarkable, not least because it's sponsored by the BIS Innovation Hub, but it was remarkable not least because all the governors of most of the major central banks from around the world spoke at that, and they were there talking about their issues. And on the agenda of every single one was a central bank digital currency. So I have to say, I've come to the conclusion, is this game changer or hype? I think this is game changer. But let's talk through it during the course of today. And, Jannah will talk about some of the issues, particularly the individual dimensions, I'm sure, of central bank digital currencies. And Jim will talk about the practical applications on payments, which give you a sense. but I think, like it or not, we'll look back in 5 years and realize we only touched the tip of the iceberg. So I think it's probably enough from me, Helen.
Very interesting, Jeremy. And also, I can, as I said to you, I remember being at the Central Bank in Czech Republic at one of the round tables 2 years ago, possibly. I went with the European Union representative as well, and everyone was having this conversation. But it felt a little bit like it was just a discussion and a discussion point that was carrying on, but there wasn't an activity that was coming. And as you say, I feel like it's moved at speed, and we're moving now more into an active space. And we can see this when, I'm sure you'll highlight this, when we see what the Bank of England has been doing, for example, in this space, and what other central banks are doing. Jannah, can we hear from you as well and get your introduction?
Sure. So thank you for having me here today, Helen, and the LIBF team. My name's Jannah Patchay, and I'm the director of Markets Evolution, which is a consultancy specializing in market structure. So market structure is meaning the way in which different market participants, exchanges, trading venues, clearing houses, and banks, investors, etc., all interact with each other, and what happens if you change something. So how do you actually develop markets for new products and services and things like that, as well as regulation and financial innovation in particular. So like Jeremy, my two key interests on the financial innovation side are sustainable finance and how to save the planet, and or at least keep the planet habitable for as long as possible, and the emerging area of digital assets, which I see as a natural evolution of financial markets. So rather than a brand new asset class, I see them very much as the next logical stage. And therefore, central bank digital currencies are a key enabler of this next phase of development of financial markets.
Very, very interesting. And also that the awareness that we probably all have, in a passive way, that there's an interaction and there's an interconnection between everything that we do in the financial markets, and we often get like pigeonholed in our own space and don't think about what's happening in other parts of it. So that'll be very keen to see these pragmatic examples as we move forward. And Jim, just finally from you.
Yes, thank you. So again, thank you for inviting me. So I currently have my own payments consultancy company. I've been in the payments industry for over 30 years now, and over that time I've been both a practitioner of payments. I've been involved in the processing and back office, as well as being involved on the advisory and consulting side. So I've been involved in many of the payment initiatives over the years, such as SEPA, the PSD 1 and 2, open banking, and also faster payments. My involvement with Central Bank Digital Currencies and indeed blockchain started in 2014. And while I was working at HSBC, I was one of the contributors to the business case which the central banks of Singapore, Canada, and the UK asked us to write, to look at why they ought to use a central bank digital currency for cross-border payments. I was also part of the original utility settlement steering committee as well, that devised the finality infrastructure. And I was one of the contributors to the recent paper by the Whitechapel Think Tank's Future of Payments Working Group on the impact of central bank digital currencies on the future of payments. And like Jeremy, I think that this is coming, and I think it's something that we need to really be thinking about over the next 5 years at least.
Thank you very much. And as all of you have touched on, we'll look at how this impacts the payment structure and the interoperability of the structure, and also the wider monetary system and the economy. Now, I know we've had some people having technical problems. I hope you've all got them sorted out while we were having our introductions, but we'll keep moving on. And I know the events team is helping. I wanted to ask, I mentioned obviously that Bitcoin's happening. We've all read about Facebook and Libra and DM and everything else. And I'm sure we're all, a little bit mixing the terms as it were. But one thing that was clear to me is that money has been a lubricant in the financial services and in the financial system for a long time. And the UK has been at the forefront of financial services. We're known for having that concentration, being in the right geographical place with the right language at the right time, as far back as the Romans, right? So in one way, I'm asking myself, why in the UK? Why the UK central bank digital currency and digital pound? And Jeremy, I would like to turn to you here. If you could just set a little bit of the scene a brief historical perspective. What has led us to this moment, and who a few of the key players and stakeholders are? You mentioned before there's government, there's academia. How does that all fit together as a puzzle?
Okay, Helene, yes, let me have a crack at that. I think the first thing to understand is that the cryptocurrencies we're talking about have gone off, I believe, on something of a cul-de-sac or a blind alley, because they're now being treated really as investable commodities. Now, that was not the original intention. The original intention of these of the early currency, the sort of Satoshi Nakamoto perspective, was we need, in simple terms, a currency that is fit for today. Now, what's happened? Why is today different to yesterday? And the answer, I think, is because what we've done is we're in the process of constructing a new operating system on this planet. And you can see it in microcosm if you look at the way the big giants like Google and Amazon and the others are creating operating systems which make our lives significantly easier in the world of commerce or social interaction. And so it's not surprising to me that you need a new form of money to be able to serve that new operating system. That's all money does. Money serves a broader purpose. And so in this case, what we have is a technology being deployed and used to provide a new set of money, a new form of money. And the issue is that if that is true, and you do have a new form of money, then it is going to require some degree of control. If you don't control it per se, then the danger is it does become a speculative commodity. And it needs controlling for a number of reasons, but the economists would tell you that apart from anything else, if you're going to control the money supply of an individual jurisdiction, you do need control of the money. And that seems to make perfect sense. So it wasn't a surprise when it became clear from people like DM or Libra, as it was originally called from Facebook, that they realized just how powerful a new form of money could be used within their system in order to satisfy their customer base. It wasn't surprising that central banks and governments said, well, just hold on a second, because if this thing runs wild, then we could be in for a whole heap of trouble. And that is why central banks around the world started to engage in central bank digital currencies and understand the dimensions of them. Now, I think probably we've only barely begun to understand the full uses that can be made of it. But I don't know if that helps, Helene. So I think the major stakeholders now are going to be a combination of the central banks and governments and the public sector, and the big enterprises in the early stages, but it'll probably get more democratized, who are able to introduce this new form of money in a controlled way within their own particular operating systems.
Okay, thank you very much. And actually, as we're talking, there are some questions. There'll be some questions. Thank you, Alan Fletcher, on DeFi, and we'll go back to this. And then from Michal Lenikowski, I probably just said that incorrectly. Talk about crypto being built on the blockchain, where you can see the connections and might not be an advantage for a lender. So we'll try to address these as we go. Jannah, I wanted just to pick up with you on also maybe some of the more of the actual construction detail, as it were. So we're getting questions about DeFi. We're getting questions about the blockchain as well. What following on from what Jeremy said about the fact that central banks have now woken up, and Facebook and other things have made us think about what's the mechanics of this, and how can we apply this in other ways of this central bank digital currency? Do I go to the bank and say, here's my paying in book, Bank of England, or is there somewhere else in an enterprise way in the chain? How is it working? And is it just wholesale? Is it retail? Does it sit alongside fiat? What's the landscape look like?
It's a fairly massive question or set of questions.
It is.
And I'll do my best to unpick it, but I think at the core of that is the question, so, what the hell is a central bank digital currency, and why is it different from anything we've got at the moment? How is it going to change anything anyway? So why should we all care about it? And that's a question that I think as authors of this Whitechapel Think Tank paper, we're frequently asked, isn't all money digital now anyway? After all, if I want to transfer money to you, there's no actual cash involved. I just go onto my online banking app and make a transfer, and it all happens, digitally in the ether. And there are no wheelbarrows of cash being exchanged between the banks to settle this every day. And that's part of the challenge. Yes, we now have this amazing digital banking infrastructure, but it was all built incrementally over the years, over many decades. And underlying it all is an assumption that actually, at the end of the day, two banks are going to exchange wheelbarrows full of cash. And when you have infrastructure that's grown in a legacy way without any clear design, then what you end up with is something that is now, first of all, it's got a lot of legacy inefficiencies built into it. So if we look at until fairly recently, when faster payments was introduced, if I transferred money to you, it would take 3 days to get to your bank account. Now, why did it do that? Again, if this is all digital. Well, that was a hangover from that legacy settlement time. And it was actually quite lucrative for many banks as well, because the time that it was in the ether, it wasn't actually in the ether. It was sitting in the bank's own bank account and therefore gathering interest for them. So eliminating those kind of inefficiencies is actually quite disruptive to business models. So there's there's that aspect of it. The second is we also don't have now a form of money that's actually able to fully leverage the technological capabilities that we have. So when we look at the payments that we're able to make, we look at the things we're able to do with money now, they don't reflect our actual technological capability in any way. And that, to a large extent, is why Facebook sought to introduce Libra in the first case, because if they had a digitized form of currency, a digital native form of currency, albeit backed by a number of underlying assets and currencies, then they could eliminate some of those inefficiencies in peer-to-peer payments and cross-border payments and things like that. And they could also use it in a digital native setting more efficiently. I think that leads to the spectrum of digital currencies. So we can see that there's already a need for them, because Facebook's introduction to Libra is probably the biggest argument for them, and certainly the one that inadvertently sparked off the massive central bank and regulator interest in them. But they do sit within, digital currencies do sit across the spectrum. And at one end, at the very far end, you've got cryptocurrencies, which, such as Bitcoin and Ether, which, as Jeremy said, are kind of on their own path. In the middle, you've got a fairly broad range of the privately issued stable coins, which are the private sector's current means of filling this gap. And they range all the way from Facebook's Libra, which addresses some of the more retail use cases, through to Finality's payment system, which is built, which is the evolution of the utility settlement coin, which Jim spoke about, which is looking at addressing the more wholesale banking use cases. And all of these, and Tether as well, which some participants may have heard about, which is frequently used for the settlement of cryptocurrency transactions on Ledger. And all of these have a role to play, but they are all primarily private sector solutions to various problems or challenges that require a digital native form of currency. And the challenge with all of them is that because they're privately issued, they introduce counterparty risk. So what happens if Facebook goes down, or what happens if Tether goes down, or something like that? You're faced with counterparty risk. Central bank digital currencies, on the other hand, are basically a central bank issued digital native form of fiat currency that would then give all the benefits of a digital native currency, whilst also eliminating the counterparty risk associated with private stablecoins.
And that was going to be one of my other questions, was about security and transparency as well. So that's part of going to the answering of that question, because in my little note to myself saying, what about trust and security in this whole space? Because again, we hear it from the more, as you say, private side. I just want to see there's some of the questions. So of course, someone mentioned that isn't crypto built on the blockchain, and again, I guess the question here is are we still using blockchain technology in this instance? And then someone is talking about the traditional model. It's like you're moving money using horses in a carriage when you have spaceships available for this. It's about speed and cost.
That's a really good analogy.
Yeah. Thank you, Cornell. That's very interesting. Okay. And then a question that might come from YouTube. Why do private individuals need a CBDC to access decentralized services that already exist? So if we want to answer these as we go along, before we get to speak to Jim, you feel free. Otherwise, we can hold them till later. But
I think I will read the questions and also delegate some of the questions that you asked earlier around how do how does this work in practice? Do I have to go? Do I go and become a customer of my local central bank, for example? And does this need to be implemented on blockchain? I will delegate those to Jim or
Jim. Perfect timing.
I know. I love you too, Jannah.
We'll talk about the money
that I could have.
Okay.
Including the question of, as an individual, why do I need digital currency to go and, settle something in a DeFi landscape or something like that? And this is a common question across the wholesale usage of stable coins or digital currency as well, which is, we're now moving to a point where we have digital assets that can be instantaneously settled, or we can have digital transactions that can be instantaneously settled. But if we don't have a payments mechanism that allows for instantaneous settlement, then there's no point in having assets that can be instantaneously settled, because then there's just going to be a gap between the two and your settlement time is still the same. So we need a means of settling instantaneously as well. So how do you bring the payments leg into this digital environment, which, typically is on ledger, so on a blockchain or a DLT of some kind, because that's the way these things are implemented. And the answer is that's through digital currency. It is the solution to that question. And that then leads on to the question of, well, what are the other things I can do once I've actually got a digital currency? And the answer there is, well, there's lots of things that you can do. So, for example, if you have digital currency transactions that can be governed by, or digital assets that can be governed by smart contracts, or digital currencies that are programmable via smart contracts, you can build in additional functionality around transactions. You can, and I realize this is not the most popular example to start off with, but if you're HMRC, you can deduct sales tax at the point of a payment being made. Or you can, you can have a full record of anyone's taxable transactions. If you're a government, then this is a great new way of delivering policy objectives. So as we saw during the COVID-19 crisis, a lot of government departments struggled with the distribution of funds to businesses and individuals who actually needed them. If you have a central bank digital currency, on the other hand, these kinds of helicopter distributions are made much easier, because you don't need to know a person's bank account details. All you need to have is some kind of connection with them and a wallet app or something like that, and you can distribute directly to them that way. And that doesn't mean that you're disintermediating the banks. Jim, I'm sure, will go into more detail on that as well. You can also build out more use cases around financial inclusion as well. So having a wider range of distribution and on-ramps and off-ramps to digital currency means that you can have a greater degree of financial inclusion. You can have more secure transactions as well, potentially. So there are a host of other benefits, not particularly in the way that, you know, once you've got that programmability of money, you can then bring in other technology innovations and advances such as the Internet of Things, AI, etc., and start, you know, coming up with some really powerful, very futuristic type scenarios.
It's interesting to see the actual application, the theory to the application. And of course, Jannah, while you've been talking, there's been a lot of conversation going on in the chat around trust. There was a question around unbanked, underbanked, underserved, which you've also alluded to. There are questions around stability and the monetary system and the scariness of it. We'll come to that probably more towards the end when we go back to Jeremy. So I'm just doing a little bit of, when will the government first year 10-year bond be issued? Arbitrage opportunities between digital currencies and physical currencies. And Jim, that was one of my questions. Can you swap into different currency to currency, for example? So this is a good maybe just to move over to the payment side and all the different models that we have and interoperability, and then we'll come back to the questions.
Yeah, that's fine. So what I'll just comment briefly on is some of the models around the payments in the payments environment that is being looked at, and then I'll just comment on some of the issues as well, you know, from there. I guess there are a number of models that are being looked at. First of all is what's called the direct versus the indirect model, which basically means a direct model is where the central bank offers the full range of payment type of services right across the board. In effect, it becomes a competitor to the commercial banks and the non-bank payment providers. The indirect model is where the central bank issues the currency, but all of the payment type of services and indeed other services are then offered through the commercial banks and non-banks. So they, you know, become a conduit and a channel for, you know, through the general public. And I have to say that none of the international models that I've seen so far has gone for the direct model, and I'm not surprised. I can't actually see any central bank wanting to offer a full range of payment type of services, particularly when it, you know, when it involves AML and counterterrorism finance as well. The second model is, should it be account-based or should it be token-based? So should, for example, whenever you want to make a payment, say from a commercial bank, would you just open a bank account for a CBDC in the same way as you would for a, you know, for a fiat? Or would it be token-based? In other words, can a way be found for the tokens to be distributed direct to smartphones, for example, so that the banks, in a sense, don't even need to be involved? Now, the second model is popular with those who are libertarians because it's very close to the anonymity of a cash model. You know, when I pay you in cash today, no one actually knows, you know, what's going on. And central banks, like for example, the Riksbank in Sweden, they're looking at both, you know, models potentially. The third question is the technology. Do you adopt a centralized technology or do you adopt distributed ledger technology, you know, technology type infrastructure? And now, the latter is kind of probably, from what I've seen on balance, more favored. One of the issues that will have to be resolved, though, is speed of payments. If you look at someone like Visa, for example, they process roughly 65,000 transactions per second. DLT is not anywhere near that yet, and that problem is going to have to be resolved. But of course, the benefits of DLT, you know, from a lot of people's perspective, is one is, of course, the security around the cryptography. There is the audit trail whereby all transactions can be linked back to the previous audit, you know, through the means of the cryptography. And of course, there's also the fact there's a permanent record of the transactions that can be looked at. So there are a number of areas where distributed ledger technology, you know, would actually be regarded as more advantageous, even around not only security but around resilience. Because, for example, if there are 20 counterparties on a DLT model, one goes down, you've got the other 19 can still carry on, you know, processing. From a security perspective, again, if somebody wants to hack into a distributed ledger technology, it's much harder because the fraudster has to hack into an awful lot of different computer nodes before the actual system collapses. So these models are having to be, you know, sort of looked at the moment. In terms of the architecture, for example, Central Bank of the Bahamas has gone for a centralized technology. The People's Bank of China is actually looking at both models. And I would suspect that a combination of both models might be looked at least in the early stages. So those are the models that are being investigated at the moment. In terms of some of the issues, as you mentioned, the interoperability issue, it will be very important that any infrastructure which a central bank adopts for a CBDC interoperates at two levels. Interoperates with other CBDC infrastructure, so thinking more here about cross-border payments. And number two, interoperating with the fiat infrastructures as well. Because, I mean, not everyone's going to go to a CBDC type model in day one. And in fact, it may be a long time before that happens, and it may never even happen. So there will have to be ways in which I could pay you from a CBDC infrastructure, but you receive the money within a payments fiat infrastructure. And that means that interoperability means looking at issues like standardization. For example, message standardization, looking at protocols, technical sort of specifications as well. These will all have to be looked at, because today quite a lot of the DLT models, for example, are based on their own unique standards. So that is something that's going to be looked at, going to have to be looked at very, very seriously. A second thing that will have to be taken into account is how do you synergize with the existing payment developments. So, for example, here in the UK, you have the new payments architecture, you've got RTGS renewal, you've got open banking. How do those, how can those developments be taken and actually be adopted into the world of CBDC? You also have ISO 20022 message standard. Banks are spending a lot of money working with SWIFT, for example, to adopt a global ISO 20022 standard. How does that get built into the CBDC infrastructure? How does that get taken advantage of as well? You also have initiatives like the P27 cross-border faster payments infrastructure in Scandinavia. That is a really interesting development as well. And SWIFT is looking, for example, at adopting SWIFT messages, which can make faster payments from one infrastructure to another on a global basis. How do you take advantage of that? Because what you don't want to do is completely reinvent the wheel, because then all that investment you've poured into all of that stuff that I've just mentioned goes up in smoke, and you've got to start all over again. So you don't want to do that. You want to avoid that. And then, of course, there are legal issues. How does the currency get, recognized? What about, for example, the EU Settlement Finality Directive? Can that just be automatically incorporated into a DLT, to a CBDC infrastructure in currency, or do you have to revisit the rules and regulations again? What about the General Data Protection, regulation? These are legal issues. In fact, I think I saw a statistic. It was something like 80% of central banks made the comment that right now, the CBDC would not be legally recognizable under their legal system. So that, again, has to be looked at. And the last thing I comment on is the impact on the back office systems. We are talking about changes here, not just to payments systems, but to accounting systems, to trade finance type systems, lending, everything right across the back office infrastructure will have to be revisited. And it involves looking at applications, it involves looking at channels, everything that you do, even if you only have to implement a new currency code, and that's not certain yet, still a huge amount of change. And banks, as any banker on here will tell you, are spending millions of money right now trying to keep up with payments and trying to keep up with all that's going on. So a lot of challenges around models, a lot of challenges around things like interoperability, trying to keep up to date with what's happening today, legal, and the back office systems and infrastructure.
Gosh, Jim, I'm listening and I'm thinking there's so much to consider. I go back to Jeremy saying that it has moved rapidly over the last year or so. Jannah, highlighting what might have driven that when Facebook launched or tried to launch their currencies, and it moved people along. But there's so much still to be done, and so much that has to be done, that I kind of now can understand the lag or the need for the delay that will come to actually bring this to fruition. Where in some parts of the world, I guess supposedly politically, geopolitically, you can move things a bit faster than you could do, for example, in the UK. There's been a lot of activity also in the channel, in the question channel. So before we talk about the bigger impact on the monetary system as well, let's just see what's in the channel as well. Cornell, the legal system will change with the adoption. They usually do, always do this. Usually the technology is advancing as adopted as the legal system has to follow. We did find this, I suppose, in the regulations was always catching up as well. And this kind of thank you, Cornell, comments to a question, when we're playing catch up, that has implications as opposed to having whatever needs to be embedded in the regulation or in the laws happen when it's being created. Catch-up always causes a problem. I don't know if anybody wants to comment on that.
Just one comment on the specific comment that was made there. It's not just about the technology, it's the legality of the currency itself. That is the issue that's at stake.
Okay. And we're working backwards, but surely the end goal of government's central bank is to remove the current banking intermediation process, allowing the control of money and creation and flow. This would probably include fixed foreign exchange rates between countries and allow for a social credit scoring system such as that one in the Bank of China is trying to implement. I believe we have steps to take before we can get to this point, but that appears to be the path. Does anyone want to comment on that?
No, I think that makes good sense, Elaine. I think that, in fact, there's some very interesting questions here, which when you take what Jim was saying and the sort of background that Jannah provided, make it fairly clear that A, this is a major revolution underway at the moment, and B, because of the number of people engaged in it already, it suggests that it's unstoppable. So I think the issue is going to be speed. So people who are talking about trust, quite rightly so. People who are talking about the liquidity issues for the banks, absolutely right. And indeed the very existence of banks, absolutely right. But we're talking about the fundamental lubricant of the interaction of society. And I think unless we have a major cataclysm of some sort or another, I think we can be reasonably confident that this will progress, albeit in fits and starts, and different countries will probably move at different speeds. But these issues are very much front and center of government and central bank thinking now as we move this thing forward. So I think there's some outstanding questions in this sheet, actually. We're not going to be able to answer all of them. But there are also some heavy duty variables coming up as well, and we need to pay attention to those and maybe spend a bit of money and a bit of time on those as well, Helene.
I'd just like to, sorry, I'd just like to add there as well. You know, I think there's been a fair bit of concern expressed in the questions around the role of banks in the future, and there's not a single central bank in the world so far that has proposed disintermediating the banks, going for a direct CBDC model where individuals actually go directly to the central bank. On the contrary, they have all developed their models with a layer of intermediation, mostly in the form of the existing banks and payment service providers, to act as that front line. And I think from what we've seen of central banks so far as well, they are acutely aware of the role of the banks in commercial bank money creation, and in fact, there is no expectation that role is going to go away. In reality, many central banks are actually exploring how they can continue to maintain that model with the introduction of CBDC. And some central banks, such as I think Sweden and is it Estonia perhaps, have actually come up with some interesting models around layers of intermediation and user protection. The second is that with CBDC, it does, the model that you choose for your CBDC introduces a competitive angle to it on the global stage. So countries that introduce CBDCs that have characteristics that are perceived by the public and by users as positive, namely probably privacy and security and things like that, are probably going to experience a higher uptake of those central bank digital currencies, and unless they treat them as though they're in some kind of walled garden, which I think is exactly what we're moving away from at the moment. So I think that there will be a kind of competitive pressure between applied to central banks to create CBDCs that reflect the values of the societies in which they're going to operate. And in some societies, there may be more acceptance of greater surveillance. And in some societies, there will be more of an emphasis on privacy. And the CBDCs that eventually, are most widely adopted and dominate will probably be those that are socially acceptable to the largest pool of users.
I was just going to add two quick things. One was because liquidity was mentioned, and it's not something I mentioned previously, but when it comes to payments and CBDCs, liquidity will also be a huge issue, because we've already got a situation today where in order to move cash from one place to another, you have to have collateral, and most of it is very, very high level collateral, either pure cash or it's government bonds. And the CBDC will be an extra liquidity pressure to that. And it'll be very important that when we look at the CBDC, we also look at security settlement systems as well, and how they are going to run alongside and interoperate with the cash type systems. And the other comment, I think it was Keith I saw just said about having one single central bank digital currency. I guess from an efficiency point of view, that may well be a good idea, but I'd imagine from political, economic points of view, we're probably a long way off that, and I think a lot of people might have concerns about that.
I think Keith has followed on with saying that processing basis, settlement conventions, conversion rates from one digital currency to another to a physical basis, anything that will confuse or slow the market down. There's a lot coming in. It's obviously a topic that got people very, very moved to get involved. Someone asked actually about Jim.
Yes.
What do you mean by legality?
Well, a currency has to be legally recognized by other countries, and I'm not a legal expert here, but from what I've read, that is a more difficult sort of issue than you might expect. I'm not saying it can't be done, by the way. I'm simply saying that it's an issue that's got to be considered, and a lot of thought will have to actually go into that. The other thing that I mentioned as well is it's in terms, again, coming back to settlement finality. So usually there are regulations that exempt a payment system from the normal bankruptcy regulations, and they have specialist regulations they have to observe. That hence why I mentioned the EU, the Settlement Finality Directive. So those kind of things have to be considered as well. So I'm not saying it can't be done. I'm just saying you have to think about it.
Thank you.
And I think, Helene, too, I mean, there's an interesting point here in a number of the questions, which is all to do with the sort of legal infrastructure and the way in which the whole thing is going to operate. I mean, just as a guide, really, and an indicator of the direction we're heading in, I think probably people are aware the Financial Stability Board is focusing specifically on cross-border payments. And the reason for that is that it is so inefficient and so expensive and ineffective. And therefore it needs to be picked up and addressed. Now, my expectation is, because that will inevitably involve central banks around the world, there will be a form of structure being put in place at a global level to enable all of this to take place and to help and facilitate it. And the interesting point about it is that what's happening is they're fixing on a specific issue that needs addressing, not the entire globality of a CBDC, but they're saying, actually, we need to fix this particular issue. How can we use these new digital currencies in order to be able to do so? That, I think, is where we will start to see everything begin to take more shape as we move forward at a sort of global management level, because a number of questions here are clear on this. This is playing havoc with political and economic boundaries, and it will. So there's got to be something riding over the top of that.
The other comment I just make briefly about payments infrastructure. If you look at Europe today, for example, you've got the central bank, payments system Target 2, you've got the private EBA Euro 1, and you've got a lot of ACHs across Europe. I'd be surprised if there wasn't a similar type model with CBDC, whereby not just CBDCs, sorry, maybe a similar model with cryptocurrencies, whereby you will have both the public CBDCs and you'll also have the privately run CBDCs as well. Not CBDCs, cryptos, my apologies. But again, there will be regulation behind all of that that will make sure that whether you're using a private one or a public one, that it is safe.
Yeah.
Thank you.
I also don't think that necessarily they're all mutually exclusive. So cryptocurrencies, privately issued stablecoins, and central bank digital currencies will likely all have a place to occupy in the kind of, you know, digital payments and financial markets ecosystem, and they'll have specific roles to play, and some of them may be more popular for some purposes than others. But at the root of all of it, we need a digital native form of fiat currency that's issued by central banks, and that's what CBDC is, and that's the niche that it fills.
I thank you for that, because that's, for me, that's how I understood it, as that it would be a fiat currency, but in a digital format. There's a comment from Declan Carr, Jannah, for you, a counterparty risk. So the question is that do you think that this is absent with CBDCs? Because I think that was part of one of the things you mentioned before. And so Declan goes on to say, so the Bank of England currency printing presents no risk to my purchasing power. I don't agree with that statement. So the question is around counterparty risk.
Well, there's always, you know, when you hold money in a currency, you are exposed to risk. It's just a different form of risk to counterparty risk. So it's counterparty risk is the risk that the in the private sector, a private sector issuer goes bust. The equivalent risk here is not necessarily that Bank of England goes bust, but there's a risk associated with the UK as the sovereign nation whose currency this is, and of course, and that is currency risk. So that's the FX risk that we see on the FX markets every day. And as we know, geopolitical events do influence that. So, you know, Brexit votes, pandemics, etc. They do all impact that. That should be no different than to the FX or currency risk that we have today, though. So there's no material change in terms of the form of money on how that risk manifests itself.
But that does take us on, actually. If you think now is the time to do it, just to have a look at that bigger dimension, because that question about counterparty risk, as Jannah says, I mean, every currency has counterparty risk in that it's the government is your counterparty. And if the government goes down, you've got a problem. Now, so nothing is risk-free, as the point that Jannah was making. But I think, you know, we need to think ahead a bit here, because on the one hand, if things go well, we'll be able to move in this gradual evolutionary stage where all the various obstacles are addressed and put in place. And we move forward so that ultimately we've got a new form of money, which is significantly superior in its functionality to anything that has been before, and anybody using it benefits significantly from it. Now, that is the sort of steady form of progress. There is another one. I'm going to go to the other extreme, and I'm not suggesting it's going to happen, but I think it helps to paint the picture. And it goes something like this. Global debt now is at the highest level in relation to GDP, and it's going to get higher. I think it's now at about 376% of GDP. That's global debt, and that's the direction it's headed in the next 2 years, next year and a half. So it's unlikely that it won't get there. The World Bank reckons that 73% of GDP is about the right level to be able to sustain it over the longer term. So there is a question here around, is this global debt going to be sustainable? Now, in some countries it will be, and in some countries it may not. If countries' economies start to collapse because they have been excessively overburdened with debt, then in due course their currencies will collapse. And if their currencies start to collapse, people will look for alternatives. And already some currencies are. I mean, you have to look at the take-up of Bitcoin in Venezuela to understand and realize that people are already taking that bet and moving it forward as they go. If you get to a situation where currency is collapsing on such a scale, you may need to introduce a different and new monetary system. And if you do that, you will need a new instrument. And it is very likely indeed, in my view, that under the apocalyptic scenario, which I don't think, to re-emphasize the point, we will get to, but I wouldn't be surprised if some of the juddering doesn't take place in this gradual progress we make. If you get to that point, we will need almost certainly a CBDC form and possibly a global CBDC form, which then means you have to redraw the existing monetary order. Now, the question then is, the monetary order by and large has been dictated over the past centuries by whoever was the major power, economic power in position at the time. So I think we can expect to see that if we get, and when we get to the situation where the new monetary system is being adjusted, either cataclysmically or just temporarily, I think we can expect to see the exertion of significant political influence by the likes of China and others, whose economic clout gives them the power to manage this and dictate this. So these are really interesting times ahead. And when you get a revolution of this scale, you will get the changes of positions of the big players as it moves forward. I think, again, it's tip of the iceberg.
Very interesting. Can I just, when you're speaking also, I'm thinking we go into these things with an old mindset and assuming that what we already have can then be transferred. But as you speak about it as a revolution, we almost have to just dispense with that and start from a new reality, and for the transition period, see how we can make these go together.
And just to pick up on that, Ellen, as well, from what Jeremy said, if you look at China, for example, with its Belt and Road Initiative, they're making a huge influence in Africa. They're also, over the next 5 years, looking to build a new global payments network, which they say will incorporate both CBDC and non-CBDC. And I kind of thinking, whoever controls the currency, whoever controls the payments network has got huge, huge influence. And that's why I think that Europe and the States and the UK need to get a faster pelt onto this. They need to look at this more quickly and more urgently, because we don't want to lose economic control.
No, and I think one question is, when do we think the CBDC will land? And then Lamin is saying that Cardano are already in Africa. I have this conversation in the other part of my life, in my day job. If the apocalyptic scenario in a country, sure, the infrastructure for blockchains might not function. So there are few people, Georgia, Venezuela, obviously. Would a global CBDC lead to the equivalent of a gold standard, i.e. would a government actually have to balance their books? Someone might want to comment on that.
Yes, I mean, just how much time have we got, Helene? Are we okay for?
We're just coming up to the final minute of the
okay.
time.
Just very quickly on the point about collapsing infrastructure within a country. It's a good point. But actually, when you think about this infrastructure that's being deployed is global. And therefore, in the cloud in particular, you can take everything offshore if you have to, simply to make things work. This is back to your point, Helene. You have to think about tomorrow, and frankly, today's world, rather than yesterday's, when thinking about these issues.
Absolutely. I think we did touch on why a digital currency is different to any other form of making a digital payment, but there was still a bit of a question. Taxation was another point that came up.
Can I address quickly, Helene, I use an analogy on a digital currency, which is, if you can imagine a drone, which is the payment flying from you to me, and that drone is that particular currency. The difference now is that instead of having to go from and stop off at banks on the way, it can go straight from me to you. But while it goes, it has the technological functionality to be transmitting and receiving information as it travels, checking on who you are, the services you're providing, the bona fides, the KYC, the anti-fraud, all the various bits and pieces. That is what, in my view, makes this currency so different to anything we've had before. It has considerable functionality attached to it as it travels from A to B.
The other thing that we haven't mentioned so far, but is very key for banks, again, like the Riksbank, is that the usage of cash is reducing dramatically in quite a number of countries, including the Riksbank, where it's down to about 10% of payment transactions. And COVID-19 has exacerbated that across the world. So again, if cash disappears, the central bank's got a real worry then, because the payment systems are controlled privately, it doesn't have any control. And that's another big thing that's driving it.
In the UK, we have more cash, more money being printed, but less in circulation. There's a lot on their mattresses. Okay, so what I would say to everybody with questions, if we haven't addressed them in the time that we've had, then we can share them with the panel and see if we can get them answered offline. And Roxanne, maybe we can come to our final poll before we thank everyone for being with us, which is more around what we've learned and have we changed our minds as well. There we go. So based on what you've heard today, are you more or less in favor of central bank digital currencies?
Interesting. There you go.
I'm more in favor.
Yeah.
As a matter of fact, last thing, actually, what you just said at the end, Jeremy, was one of the things I think, yes, actually, it's moving. It's got my KYC, my payment, everything's in the same place. It's got to be more efficient in that regard. Thank you very much. We'll end the poll there as well. We are out of time, but there are other questions. And as I said, I will share them with the panel. Thank you all very much, Jeremy, Jannah, and Jim. For me, this has been a topic that I've wanted to delve into. And as I said, with nearly just under 1,000 people wanting to join us on this, it seems to be one that we're all looking to address. Now, whether that was exacerbated by COVID or Facebook, we don't know. But I think that we're all less literally in touch with cash right now. We all understand digital payments much better in the last year, 13 months. We know this has been bubbling in the back, but what comes across is that the amount of infrastructure change that needs to be in place means that it won't happen tomorrow, but we do need to get accelerating the pace. And I think in the UK, Prime Minister has set up a task force for this, which hopefully won't get all mired in committees, but will actually enable people like yourselves to help us move it along. Thank you to everyone.
Thank you.
Thank you very much.
Thank you very much. Thank you again.
Thank you, everyone.
Very
Bye.
good. Cheers.
Bye.
Bye.
Bye.